In agribusiness, Agri-Marketing Magazine comparing a basket of ag stocks against other financial indices in 2023. Its ag stock index finishing the year up 24%. Now that's compared to a 14% increase for the Dow Jones Industrial Index. The S&P 500 was up 24% and NASDAQ climbing 43%. Now the five biggest gaining ag stocks for the year: Farmer Mac, the Andersons, Alamo Group, Zoetis, and Bueller Industries. Agri-Marketing says since its inception in 2006, the ag stock index is up 204%. Cattle started the new year off hot, while soybeans fall double digits on improved rain chances. Michelle Rook kicks off 2024 in Markets Now.
Well, the ag markets on the first day of the new trading year were all lower except for the cattle market. Bryan Doherty with Total Farm Marketing joining us. And Bryan, soybeans kind of led the charge down, new lows for the move there, new contract lows in corn. But what pushed it? Was it just South American weather or what?
Let's go with that as your number one reason. So we went into the end of the year with what appeared to be a pretty good forecast, or an improving, let's use the word improving forecast for Brazil. Came out of this long weekend with the same forecast, if not even a little better. So from mid-December to now, it's really more improved weather expectations and crop expectations out of Brazil. You just can't quite connect those dots that you could in early December. And then it's technical selling. The funds have been short. They added short positions. We saw that in commitment of traders. I think they looked at it today, and the traders did. The traders just said, look, there's nothing there, and they continue to sell.
So, Bryan, where do we find the next areas of chart support then for corn and beans?
Yeah, so on corn, let's start with that one. Remember, December corn did trade under 450 with today's week close in the March contract. You got to expect that. That's kind of a target to think. So right now our close 463 3/4 today, but we'd expect that 450 is a support area there. Now in beans, it's a little different. You've got this head and shoulders formation that we've actually talked about. It's been developing for multiple weeks. There's two of them on there. The first downside is around the 1225. Second is around 1150. And we've been there before. So it wouldn't be strange or unusual to see the market down into that level. Last time we were there, though, was last May.
Cattle, the only area where we did see an uptick in prices a nice day. Was that all due to the market chasing cash trade?
Market chasing cash, the board, I think, wanting to be friendly. You've had a supply-sided argument for a long time in cattle. We're not going to all of a sudden find a whole lot of new cattle. Might have a little bit of a weather story starting to develop there as a storm system out in the southwest might push inward, and that could affect weight gain. But bigger picture, I think, is probably expectations, pretty good demand over the holiday weekend for beef.
Well, hopefully we can keep that going. Thanks so much for joining us, Bryan Doherty with Total Farm Marketing, and we'll have more Ag Day coming up.